QIP in the pipeline. Give us perspective on what that means. Believe there is a Jefferies note which is out on this as well. Just give us the impact broadly.
Well, Harsh, so they've opened their 8,500 QIP offering on Monday, and the floor price has been set at rupees 265, which is at 2.8% discount to the yesterday's closing price. Now, funds will be used to establish dark stores and warehouse for Blinkit expansion, for advertising, marketing, and branding efforts, and investment is in their technology infrastructure, including cloud capabilities. Now, the main point, the interesting point here is, which Jefferies has highlighted, will Zomato be excluded from MSCI index? Now the point here is why Zomato is actually raising funds through domestic is Zomato wants to increase its domestic ownership to over 51% from current 49%. Now, to achieve this, it plans to ask the RBI to cap the foreign investor holdings at 49%. Now, this move will actually make Zomato a domestic company. Now, what are the benefits of being a domestic company for Zomato is, one is inventory model in quick commerce. So currently Blinkit operates in market model where the third party seller owns the inventory. So if Zomato becomes a domestic company, it can switch Blinkit to investor led model, which so Zomato will actually have control over the operations and the stock, and this can improve profitability as Zomato will have more control over the products, as I said. Now, but what are the challenges? If you see, Zomato's foreign ownership, if you see, is currently capped at 52%. Even after raising almost 8,500 through QIP from Indian investors, the domestic ownership might still fall short of 51%, and because of higher domestic ownership risk, MSCI there can be an exit to MSCI due to limited foreign headroom, according to Jefferies.
Okay, an exit from MSCI, likely an exit from passive flows. But Kranti, before I come to flows, let me ask you a quick question with regard to the business model in general, because recently listed, especially Swiggy. So Sarvendra may not be able to give us insight with regard to Swiggy, but this Swiggy versus Zomato debate with regard to quick commerce, just the opportunity size being very large. Both companies currently focused on raising funds, happy to continue to burn a little bit of cash, but there's a switch to profitability. So there's this kind of balanced approach. How do you view the market, and is there a preference between the two that you have? Because Swiggy also trading at a substantial discount to Zomato.
Hi, Harsha. In terms of the business models are concerned, by and large, they go hand in hand. Of course, the Zomato has been have the added advantage of growing in the quick commerce business is concerned, which is the main driver of the market at this point of time. In terms of the valuations and the business model is concerned, of course, in the duopoly market, there is a substantial market share differentiation. That's where the Zomato have the edge at this moment. And given the kind of the roller coaster ride, what we witnessed in Zomato, post-listing, the stock had a stellar listing and the stock touched all-time lows. It went below the listing price, and what we witnessed is a stellar rally in Zomato after post-listing, and the stock has been a 3x from its listing price. In terms of the post-listing, these companies are in a very hard way. They're learning how to become profitable. That's where the Zomato has become profitable. How they are going to reduce the cash burning ratio and increase the key parameter indicators, profitable indicators. That's what the important thing we are looking forward at this moment. Of course, Swiggy, in terms of profitability is concerned, still it's even though the valuations looks attractive when compared with Zomato, but it has to improve their key profitable measures, and also they have to strengthen their quick commerce business is concerned. That's where the current momentum is at this point of time. So in terms of the investing is concerned, still we will be focusing on Zomato at this point of time. We'll wait a couple of quarters for Swiggy just to observe their business performance indicators, how they are going to improve at this point of time. So Zomato, definitely a buy on dips. Swiggy, we are in a wait and watch mode at this point of time.
Right, wait and watch mode for Swiggy, but very much bullish on Zomato. What are your views on this one, Sarvendra? Zomato, good time to enter for an investor?
Yeah, I think Swiggy, as rightly pointed out, data is very less. So there, I would not have a technical stance at all. But yes, Zomato, we've got a decent amount of price data going into the last 1.5 to 2 years, where I can definitely see a pattern. So I think 240 being a very, very good support. Anybody wanting to trade Zomato, I think you should be keeping 238 as a stop loss area, and possibly you should be looking at longs within that 265, 270 band. That because that gives you the cushion. You are there with the with the strong hands when you're buying around those levels, because that's the broad QIP price as well. So around 260, 65 with a stop at 238. Yes, if someone wants for the next 1 to 3 months, I think you can participate on the Zomato upside. 300, 310 would be the targets if everything goes well.